Hello and welcome to this week's edition of Hard Money. I'm Natalie Brunell. Before we kick this off, make sure you're subscribed to our page and like this video so other people see it. And don't forget to turn on notifications so you never miss any hard money content. All right, new CPI numbers are out and the latest print shows inflation is now at 8.3% year over year. For the second month in a row, inflation dropped slightly from its record 40-year high in June of 9.1%. But the modest drop to 8.3 is likely still too hot for the Federal Reserve. The Fed is expected to do another 75 to 100 basis points hike during its September 22nd meeting next week. Fed Chairman Jerome Powell has insisted they will continue to raise interest rates to bring inflation closer to 2%. And take a look at this list shared by analyst Charlie Bolello, who tracks each CPI print. The data shows that prices for gas, airfare, hotels, and used cars were down from July to August, but food prices continue to surge, and overall inflation in various sectors, as you can see, remains high in the double digits. And take a look at this chart for skyrocketing rent shared by Sven Henrik, who said the largest monthly expense line item for many millions of consumers is rent, and that has not shown any signs of rolling over or slowing down. In a new interview on my podcast Coin Stories this week, macro expert and Bitcoin bull Luke Groman shared this reaction to recent inflation prints and why he thinks this time next year we will have double-digit CPI. Take a look.
I think we've seen the local high, but I think people are going to be surprised how quickly things come unhinged between what the Fed's already done, but more importantly, what we're seeing in energy in Europe and Japan. I think we're going to see the global economy really come unhinged. And when that happens, and I think it's a when, and I think it's pretty soon, the Fed's going to be forced to reverse course to preserve the system. But basically, their choice is going to be either stand aside and let the whole thing burn to the ground.
Deflationary bust on a grand scale. Yeah.
On a grand scale, up to and including Western sovereigns defaulting on their debt. And yes, the United States would go last, but it would go if the Fed doesn't get in there. You're going to be faced with a situation where the Fed's going to have to begin, stop with QT, stop with the interest rate hikes, cut interest rates, start regrowing their balance sheet with CPI still probably 4, 5, 6. And that's why I think by this time next year, I think it's very possible, if not likely, that we'll see CPI back into the double digits.
That full interview on macro, energy, Bitcoin, and game theory is on Coin Stories, brought to you in part by Swan. SEC Chairman Gary Gensler offered some of his most expansive and direct comments when talking about regulating the cryptocurrency industry. Speaking at an SEC conference, Gensler reiterated his position that most cryptocurrencies are securities, since most tokens were created by centralized entities for the purpose of generating financial profits. Therefore, they should be under SEC jurisdiction, he said. But speaking about Bitcoin, Gensler said it was the first crypto token, referred to by some as digital gold, and trades like a precious metal, a speculative, scarce, yet digital store of value, he said. Gensler implied that it should be viewed as a non-security token and should be regulated by the Commodity Futures Trading Commission.
We're going to work very closely with our colleagues of the Commodity Futures Trading Commission because part of this market, what I'll call crypto non-security tokens, I think it's very few tokens, but again, they have a lot of market value. We're going to work with our colleagues at the U.S. Department of Treasury and the Federal Reserve around stable coins and ensuring that there's the appropriate safety and soundness in those.
Gensler also argued that the CFTC needs greater power from Congress to regulate non-security tokens and their intermediaries. Coincidentally, the U.S. Senate is set to hold a hearing next week on the Digital Commodities Consumer Protection Act, which would do just that. Overseas, we're learning Russia might begin accepting Bitcoin and some cryptocurrencies as payment for international trade in 2023. That's per a report from local media company Izvestia. The announcement of a timeline for using the alternative payment method for cross-border payments comes a week after the Russian Central Bank and Ministry of Finance agreed such a shift would be necessary, precipitated, of course, by Russia's response to sanctions. A director at the Russian Ministry of Finance was cited in the media report as the source for the timeline, which was reportedly confirmed by the head of Russia's legislative governing body. Canada has elected a new leader of its Conservative Party. Pierre Poilievre won in a landslide with more than 60% of the vote. One of the things Poilievre campaigned on was eliminating Canada's debt and stopping excessive money printing. Listen to his recent speech talking about what is money.
Money, of course, is merely a technology by which we transport value over time and space. We developed a technology that would allow two people who are exchanging things to go ahead with their exchange even if each did not have the ability to supply the other with something that the other wanted. They could simply use this technology called money in order to transport the value between each other across time and around different geographies.
Poilievre, who is pro-Bitcoin, said that Canada must return its currency to a form of hard money that the government cannot inflate away. Poilievre plans to challenge Justin Trudeau to be Canada's prime minister. Trudeau responded to Poilievre's remarks with tweets and rhetoric of his own. Take a look.
Telling people they can opt out of inflation by investing their savings in volatile cryptocurrencies is not responsible leadership.
This week, Ethereum began its highly anticipated and controversial merge to switch from proof of work to proof of stake. The merge aims to reduce energy and the number of people and computers it takes to add another data block to the Ethereum network. But many issues are already coming up, including validators going offline, missing blocks that weren't mined, and added volatility. Many questions also surround the change, including whether the merge will actually bring down gas fees and if there will be a significant fork by miners who choose to remain on proof of work. Critics of the merge argue the transition to proof of stake will make Ethereum even more centralized, resembling our current fiat system, which benefits those with more money at the expense of everyone else. Next week, we'll be speaking with a vocal critic of the proof of stake transition here on Hard Money and sharing more on the difference between proof of work and proof of stake. Don't miss it. All right, switching gears now to some more Bitcoin headlines. Fidelity is considering a plan that would allow individuals to trade Bitcoin on its platform. Fidelity already allows hedge funds and other institutional investors to trade Bitcoin, but this latest plan would make it available to more than 34 million retail accounts. If Fidelity moves forward with this plan, it's likely going to face a lot of scrutiny from regulators. Earlier this year, the Department of Labor expressed concern over Fidelity's plans to allow its employees to invest in Bitcoin through their retirement plans. This news also comes as Fidelity, along with two other financial heavyweights, Citadel and Charles Schwab, announcing they are launching their own crypto exchange, EDX Markets. The companies say it will be the first of its kind exchange to offer safe and compliant trading of digital assets through trusted intermediaries. A Washington, D.C. lobbyist group is accusing the SEC of harming investors by not approving a spot Bitcoin ETF. The Chamber of Digital Commerce claims that investors are being forced to use unregulated or foreign alternatives. A spot Bitcoin ETF has long been viewed as a major step toward Bitcoin adoption. The SEC so far has denied 16 separate applications for a spot ETF, but futures ETFs have been approved. In all of their rejections, the SEC cited concerns over market manipulation. The brother of an ex-Coinbase manager has pleaded guilty to insider trading charges. Nikhil Wahi admitted this week that he used confidential information obtained from Coinbase to make money from insider trading. Wahi's brother, Ishan, was a product manager at the exchange, and specifically, Ishan would tell his brother what tokens would soon be listed on Coinbase, and then Nikhil would front-run them on other exchanges. They made about $1.5 million from the trades. It's unclear what kind of punishment they face. In other news, Saylor and Microstrategy continue to dollar-cost average us into oblivion. Saylor is doubling, even tripling down on Bitcoin. In a recent SEC filing, Microstrategy announced the company is selling $500 million of its stock and may use the funds to purchase more Bitcoin. Microstrategy is already the largest corporate holder of Bitcoin with more than 129,000 coins on the balance sheet. By the way, Michael Saylor is a newly confirmed speaker for the Pacific Bitcoin Conference that will be held November 10th and 11th right here in LA. All right, from LA to the UAE, a luxury resort in Dubai will now accept Bitcoin for goods and services. Palazzo Versace Dubai has partnered with Binance to allow customers to pay for rooms, restaurants, events, and other services using Bitcoin. Dubai, like many other cities around the world, is competing to become a Bitcoin hub. They recently approved crypto exchange FTX and crypto custodian Komeinu to operate inside the United Arab Emirates. The lawsuit between Bitcoin personality Hodlnaut and computer scientist Craig Wright is now underway in Norway. Wright has long claimed to be Satoshi, the creator of Bitcoin. However, that claim has been widely discredited and rejected. At issue is a series of tweets from 2019 where Hodlnaut wrote that Wright is a fraud and a scammer. Hodlnaut is suing Wright for a declaratory judgment that his tweets were protected by free speech in accordance with the Norwegian constitution. If Hodlnaut is successful in his lawsuit, it would help him in a separate libel case in the United Kingdom that was filed by Wright. This trial is expected to finish by next week. Wright recently also sued podcaster Peter McCormick over a similar issue, but was unsuccessful. And finally, Swan Bitcoin, a Bitcoin-only service provider, has launched the first ever Bitcoin-only platform for financial advisors. Swan Advisor Services will be a wealth management and custody platform for advisors to monitor, manage, and custody their clients' BTC. The company says this will make it easy for financial planners to use Bitcoin for their clients' portfolio management tools. Swan Bitcoin is, of course, the parent company of Hard Money. All right, that's it for your headlines. Coming up, we speak with Alyse Killeen of Bitcoin VC firm Stillmark. But first, these messages. Welcome back to Hard Money. Joining me now is Alyse Killeen, founder and managing partner of Stillmark, which is the first Bitcoin technology-focused venture capital firm. Thanks so much for joining us, Alyse.
Thank you for having me. It's great to see you.
It's great to see you, and we would love to hear a little bit about the trends you're watching when it comes to VC investing and Bitcoin, especially in this bear market, which is such a critical time for building.
It is. So what's been happening in this bear market is an acceleration of the introduction of new on-ramps for a whole new class of Bitcoiners. And what that has the effect of doing is getting us ready to have a really compelling and a promising bull market. So we're seeing this happen in two different ways, which is really exciting. One, from a technology perspective, the introduction of the Taro protocol, which allows USDT and other stablecoins, other digital currencies to be exchanged peer-to-peer for free, virtually instantly on Lightning Network, is in development. And we're expecting to see that in the hands of a broader developer community in the coming quarters. What that does in terms of adoption is it allows folks in emerging markets that don't have access to banking tools to be banked by Lightning without having to tolerate Bitcoin's volatility, which of course is very hard to do if you're making a couple $100 a month. And if your family is maintained on really what you're making, you don't have much room to invest. On the other side, we're seeing traditional institutions, most recently and notably Fidelity and BlackRock, think about ways to introduce Bitcoin to their platform so that their existing group of investors can have exposure in a really familiar way. And so those trends will not just be important today in the bear market and getting people more familiar with Bitcoin, but they prepare us to have a whole new generation of Bitcoiners be activated in the upcoming bull market.
Well, Alyse, I know you're a huge proponent of scaling Bitcoin via the Lightning Network, and I know you track so many of the developments happening in that space, including Lightning Labs' Taro protocol. So can you share a little bit more about what's happening with Lightning and how that will impact adoption?
So what's happening is that developers and startups have the opportunity to respond to the feedback they've received from the early adoption of their technologies. Bitcoin companies in particular are very well positioned to be able to be responsive to the KPIs generated from early trials of their product, whether that be app or infrastructure. In the case of Taro Terra was emergent from feedback gained in developing markets and El Salvador, especially when Lightning Network really gained sort of depth of adoption. In both El Salvador, once BTC was introduced as legal tender in September 2021, as well as in other developing markets. And so what the feedback is that Lightning Network was something that resolved an acute need of families and businesses in markets where the cost of interacting with financial tools exceeded the means of the local community. So what happened was Lightning Labs took that feedback back to their developer team. The development team led by Lalu put their heads down and found a way to really resolve that so that the technology could be accessed by people of lower socioeconomic status without forcing the tolerance of volatility. So to give a clear example, if you're a family in El Salvador making $400 a month and your expenses range between $380 and $420 a month, to tolerate 20% swings in Bitcoin is something beyond your capacity. And Terra resolves that. It allows you to use Lightning Network without having to take on that risk for your family.
There seems to be so much promise when it comes to building on Bitcoin that makes people bullish. Well, we reported earlier that traditional finance giants like Fidelity, Charles Schwab, and Citadel, they're all getting into this space. And I'm just curious your thoughts on institutional adoption. What can we expect going forward? And is it something that's good or bad for retail holders?
That's a great question. So I think what we can expect going forward is that Bitcoin feels more familiar to a broader group of people. And that's important. So I think the people's first entrance into Bitcoin is generally through a friend or a familiar entity that can offer a Bitcoin narrative and a Bitcoin product that feels safe and consistent with the values that new investor or user of Bitcoin already has in place. And so what Fidelity and BlackRock are doing, similar to other institutions we've seen adopt Bitcoin in a breadth of ways in prior cycles, what they're doing is allowing Bitcoin to sort of be introduced in a way that feels consistent with other products they offer their clients. And they're even with BlackRock, for example, they're even offering the same sort of tools of market interpretation and data insights that they would for other products on their clients' Bitcoin exposure. And so it allows people to incorporate Bitcoin into their standard processes and lowers the barrier to entry. And we'll see the impact of that going forward. I think it's really exciting, not just on its own. It is exciting on its own, but matching that with the introduction of new technologies that make Bitcoin easier to use for people of lower socioeconomic status really puts us in a position to speak to a broader audience.
And again, more momentum, hopefully, for the next bull run, right? All right, the last thing I wanted to touch on while I have you is Bitcoin as an inflation hedge. Critics say it's not. We got this latest CPI print, still a very high number year over year. What's your counter argument?
Bitcoin's sort of relationship to the rest of the economy will change as Bitcoin matures. And so while we aren't seeing evidence of Bitcoin as a hedge to short-term immediate inflationary movements, I believe that will change over the long run. And so we need to sort of be both cognizant of what Bitcoin is and what it can do by the nature of the technology and the principles enforced by that technology, as well as its current state of maturation. And Bitcoin will look different in 10 years in terms of how it relates to other macroeconomic trends, but it will look exactly the same in terms of the hard promises it makes to users. And resolving those two truths is something that's complex to do, but I think that because Bitcoin has been so consistent in what it offers and so stable in both its performance and promises, we can expect that it will allow an opportunity to hedge against a variety of things, including inflation in the longer term.
Such great points. When in doubt, zoom out. All right. Thank you so much for joining us, Alyse Killeen, founder and managing partner of Stillmark. And don't go away, because coming up, our report this week tackles Fiat Food and some of the health trends that have popped up among Bitcoiners. That's after these messages.
Oh, hi, I'm Max Patrick. And this, of course, is Plucky. I got a new job. I'm now Plucky's trainer. We're doing some of these sit-ups here. He wants to get as strong as possible for the fiat money apocalypse.
That's right, Max. We're both heading into the fiat money apocalypse, and I'm stacking sats over Swan Bitcoin.
Oh, that's so smart, Plucky. How did you get so smart? Get the Swan app.
They say the sizzle sells the steak. But among Bitcoiners who are increasingly fed up with the effects of what a broken fiat monetary system has done to our nation's food, it's becoming more like the health and environmental benefits that sell the steak.
It's not a good picture for the food security of this country unless our country makes some serious changes.
Dr. Brooke Miller is a physician with a background in family medicine. He also happens to be a rancher and the president of the United States Cattlemen's Association, which gives him unique insight into the connection between government policy and the American diet.
We're going to have a real food crisis in this country. We'll be dependent upon 4 major multinational corporations to supply our food. Big food corporations can make huge profits on cheap crap food, and that gets back to the dietary guidelines, which is something that's sponsored by the government.
Dr. Miller is alluding to the corporate monopolization of our food supply that has resulted in a small amount of behemoth companies controlling most of what's in our grocery stores. And when it comes to meat, the picture is even more alarming. Just 4 companies control 85% of the nation's beef supply. His solution starts with reconnecting consumers with the producers of their food.
Most people think their food comes from the grocery store. It's got to be on the consumer, both in trying to buy as much direct and locally as you can, and if they want the healthiest beef on the planet and beef that is grown in a humane and regenerative way. When you buy directly from the farmer lives there, he lives with those animals, he lives on the land. He's not going to abuse his animals, he's not going to abuse the land.
Dr. Miller is not alone. You may have heard of Texas Slim, who has been making the rounds on a series of popular Bitcoin shows. As the founder of the Beef Initiative, he promotes access to high-quality beef and is trying to educate the public on taking greater care in where they source their food.
If you look at our cycle of agriculture in the United States of America, we've lost that food intelligence as us, the consumers. And so what I wanted to do is I wanted to bring a new awareness of like where food used to come from, where it is now, how we got here.
And what that's leading to is a myriad of health issues, from obesity to diabetes, many of them linked to chemicals, preservatives, and cheaply produced alternatives to real animal fats. Texas Slim points out that some of our quote-unquote health food is actually making us sick. And he argues we need more food intelligence.
I always tell people about the cholesterol lie, the fat-free lie, the seed oil lie. And if you look at how we introduced fake commodities into our food system in the early 70s, whenever we lost the value of the dollar, went off the gold standard, well, you can look at our health as well. And you can do a correlation, and it's basically the same chart. Our failing health is the same as the failing dollar.
I got awakened on the food issue about 10-15 years ago. I improved my health massively by simply realizing, just because something is in a supermarket doesn't mean you have to eat it.
Dr. Safety Namus, who holds a PhD in sustainable development, says his health was transformed by switching to a meat-based so-called carnivore diet. He devotes an entire section of his book, The Fiat Standard, to explaining the effects of the fiat system on our physical health. He points out the 5 biggest issues in today's food, created through fiat corrupting the incentive system in food production. They are polyunsaturated and hydrogenated vegetable and seed oils, processed corn, soy, low-fat foods, and refined flours and sugars.
You can connect the dots and you can see how much money and effort and subsidies and government policies have gone into promoting those foods. So on the one hand, you have the dietary guidelines, basically telling people to eat all of the stuff that has low price elasticity, the stuff that involves a lot of industry. And so therefore, when there's inflation, that stuff's price doesn't rise. So corn, soy, sugar, flour, and I think perhaps the most pernicious is seed oils, which are absolutely devastating, and they've just been normalized as food.
Why does a carnivore diet work? Why does a low carb diet work? Because it lowers your inflammation. And how does it do that? It lowers your dependence on insulin.
Studies show Americans exercise more than any other country and have more access to healthcare, yet we have rampant obesity and diabetes epidemics raging in the US, affecting the young and old alike. The result has been an explosion of medications to mitigate these and many other health conditions that were once rare. Some Bitcoiners argue big pharma profit margins are also benefiting from the corruption of our food.
Canola oil and all of these things, they're industrial waste that they've managed to make slightly less poisonous so that they don't kill you straight away when you eat it. It kills you slowly and then allows you to generate a lot of profits for the medical industrial complex, which is another huge fiat issue.
Big food's there to cause the problem, big pharma's there to give you the cure.
But the real cure could very well be connected to our system of economic value and a reordering of incentives through fixing the money. As long as the Dr. Brooks and the Texas Slims of the world fight to raise awareness, some argue that sound money could lead us back to a sound diet.
What we're going to do with food intelligence and with the beef initiative and with Bitcoiners that think differently is that we're basically going to start decentralizing an apparatus that is basically trying to kill us. So it's kind of intense. It takes a lot of effort to understand it, but if you can focus on one thing, that is food intelligence, then your life will change for the better.
We hope you enjoyed that report on Fiat Food and the carnivore trend. And now let's bring in Andy Edstrom, CFA and author of Why Buy Bitcoin, for a little macro update. Andy, we discussed the latest CPI print earlier and various components within it. So what do you think this means for financial markets in the near term?
Well, Natalie, the August CPI data were certainly higher than the market expected and higher than where the Fed wants it to be. While energy-related prices came down a bit month over month, the problem was that everything else in the consumer basket, particularly food and rent, appear to be showing stickiness in the upward direction, and more so than expected. So it's hard to claim that CPI is headed in the right direction, and that's probably why financial markets sold off so significantly after the CPI numbers came out. It reinforced that the Fed will likely continue on a path of tighter monetary policy, and potentially even tighter than was expected prior to the latest numbers. Anyway, the S&P 500 was down over 4%, and foreign stocks were down roughly 3%. So it was a tough day for stock investors. The 10-year Treasury yield is again approaching 3.5%, which was the record for the year that it had set earlier in June. The next Fed decision comes out next week on Wednesday, and investors have shifted from debating whether the Fed would more likely raise rates by 50 to 75 basis points to whether they'd likely raise rates by 75 to 100 basis points. Looking ahead, we get PCE inflation data on September 30th, and the next CPI data will come on October 13th. And then also keep in mind that the next Fed rate decision comes on November 2nd. So to sum up, just as it has been for a period of months now, it seems that investors remain very focused on inflation and the Fed's policy reaction to that inflation. And frankly, that seems unlikely to change anytime soon.
All right, and all eyes will obviously be on the Federal Reserve meeting next week. Thank you so much for that update, Andy. And thank you so much for watching this week's edition of Hard Money. Our goal is to give you the latest headlines impacting Bitcoin and the global economy while bringing you original interviews straight from the biggest names in the space. I'm Natalie Brunell, and I'll see you next week.